Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, including potential trading setups, starting with the medium time frame bearish scenario where we're still looking for a move towards the downside in a wave Y. A wave Y is a three-wave structure to the downside, with currently the most common target area of wave Y being between the 1 and the 1.236, taken from the high to the low of W to the high of wave X. And this has to be the high of wave X, as in a wave X we're then looking for an ABC expanding flat, with the most common target for a wave C being between the two 1.618. Also, a wave C is an impulsive structure, and this move over here looks like a nice impulsive structure, but this range is too long now for a potential wave 4 and another wave 5. So having the high of a wave C inside this area is definitely what I'd be looking for. The thing is, I don't really like to put a potential short scenario over here from an Elliott Wave point of view, because this currently looks a bit more bullish. We don't have any bearish CVD divergences with this high going on. There's more like bullish divergences forming all the time, so I'm not really want to go against the trend, because in the end, trading with the trend is your friend, as they always say. So preferably, if price is going to move towards the downside, one might get a potential setup over here. However, there's one problem that I have with this scenario, and that's the following. If I open my target box over here, we were looking for a long scenario over here, right? I gave it in the video, even very, very nice for a move to the upside. And the strongest support we had over here was the weekly naked point of control, which we hit before then liftoff. The other supports over here are a little bit weaker, and also if for a wave Y price is coming down, then you can see that the target area for wave Y is similar to where price has already been. That's not something I like to see. I like to see a wave Y going then a bit deeper, maybe even to 22k for example, because this is a fresh support area not yet tested by price. So I think that if price is going to move to the downside, likely this scenario will not hold, and therefore this scenario as it stands is an alternative scenario for me. If we then look at the medium time frame bullish scenario, then this corrective structure is already finished with a three-wave structure ending wave Y inside a common target area for wave Y. Once again, the 0.618 to the 121. Very nice for then a move towards the upside. In this case, we then label this as a wave 1 instead of a wave C, while the retracement and the range that we get at the moment is then part of a potential wave 2. Has to be said that the most common target areas for a wave 2 from a Fibonacci standpoint, taken from the low to the high of 1, is between the 0.5 and the 0.786, and as you can clearly see, price is not even coming close to this area over here. The 0.236 is a very, very rare bounce for a potential wave 2. The 382 is rare and the 886 is rare as well. So for wave 2, preferably you want to see deeper price action. However, maybe in a bull market where we expect potentially a wave 3 to the upside, price doesn't really like to go that deep, as we've already seen in the bull run in 2020 as well, because then people are missing out. However, more locally, another low would not be a bad idea. Now the potential setup, of course, is in a potential wave 2 to enter a potential long in this area, and there's basically two areas that might be interesting, either just above the 382 or on the linear chart the 382, with the support area over here at 29k to 28.8k, and a bit lower at the 786 between 26.5k and 26.2k. Of course, everything I show, no financial advice, guys. You have your own plan, you know how it goes. If we then go to the lower price action or the lower time frame price action over here, then we're going to zoom in to this range as well in a second, because we're looking for a 5-wave move up, which in this scenario is already finished, and then a wave 1, and currently then looking for a wave 2, which is shallow. Now the rule of alternation in Elliott Wave says that if a wave 2 is a shallow and a long correction, so something like this for example, then eventually a wave 4 after you then get a wave 3 and then a wave 4. Wave 4 tends to be short and deep. Now still the maximum target for a wave 4 remains the 0.5, but it is still interesting that this wave 2 is so shallow, which also fits with the bull market. Of course, we don't know what's going to happen eventually and how the breakout is going to occur, because no one knows what price is going to do, but it's all based on probabilities, and currently the probabilities are in favor for more upside. Now price bounced on the 0.236, as mentioned, a rare target for a wave 2, in between the 0.618 and the 1-to-1 fib time, taken from the low to the high of 1 to compare the length in time of 1 with 2. And this is is fine for a wave 2. If price comes down once more, that's still very fine for a wave 2. And remember, we still have that support area over here around 29k, which can be a very interesting potential long area over here, which of course depends on how price moves to the downside. If out of nowhere it's going to be high volume, very impulsive, not too confident, right? You want to see some support. Whatever that support is for you, you need your own entry requirements. Maybe for you, it means that you see a bounce to the upside, then a retracement, some bullish divergences on RSI or stochastic or CVD, maybe a change of market structure or whatever it is that you're looking for to give you the confidence for then a continuation to the upside in case price does go to the downside once more, because of course that is the question. If you look at the micro scenarios, then the bullish scenario over here is that wave Y is in. This was the corrective structure. This is then the low of potentially a wave 2 over here or a wave B and an ABC, but in a more bullish scenario, wave 2 for then a bigger 3 towards the upside. This then means that we'd be looking for an impulsive structure to the upside from this low, and that's like a little bit the problem. One can count potentially 5 waves in this move up, but it's not clean at all following Elliott Wave rules in an impulse, which I'll show you in a second on the 5 and 15 minute time frame. So a low over here, well, we were looking for the key level in between the 1 and the 1.236, common target for wave Y, taken from the high to the low of W2, the high of wave X, for then a very nice bounce. After, over here, by the way, this moved to the downside after the double top got taken. Now, double tops are always a magnet for price, as well as double bottoms, by the way. So this was a very nice move to the downside, followed by a very nice move to the upside. And now we've been ranging over the weekend, which is of course typical for the weekend as well. And in the bullish scenario, you want to see continuation to the upside. However, if we go to the bearish scenario, and I will go into the local time frame after this, right? So in the bearish scenario, we still expect one more move to the downside. And here's the same setup once again on top of the target box in case price does come down. Now, there's two scenarios from a bearish point of view that might extend this corrective structure for one more low, where price at least takes the low over here at 29.4k. We have a WXY and an ABC scenario over here, with a WXY being a 3-3-3 scenario. So all the waves are 3-wave structures, eventually wave Y, and usually it's a shallow retracement as well. So that's why wave Y can end somewhere around the target box at 29k. Or we have the ABC expanding flat scenario, where the most common target for a wave B and an expanding flat is the 1.236 to the 1.38, taken from the high to the low of A, which is very close to the 2022 range highs. And oh boy, would I love it for price to move up, take the liquidity, everyone bullish, oh 32k, whatnot, but then wick this liquidity, move to the downside, close the candle below, and then boom, move down. That's a very interesting potential short setup, which is then a swing failure pattern setup. So you take the liquidity of the highs in 2022, then price closes below the highs, stop loss above price over here, looking for downside. And then of course, depending on how price is going to form, either continue down, or if there are going to be bullish divergences forming just below resistance, then of course this is invalidated, because you don't want to take that risk trading, especially against the trend, of course, locally. So in this scenario, an ABC, a wave C can be more impulsive for potentially lower prices. The thing is that below the 29k support, I only have this one over here, which is all the way at 26.4k. Looking at how price is forming over here, at the moment, I wouldn't expect price to go below 29k in case it does come down to 29k, because this is such a horizontal, shallow corrective structure at the moment. If we then go to the local price action over here, and this is where we're gonna zoom in. So in the bullish scenario, we want to look at this as an impulsive structure, like a wave 1, for example. But if I go to the 5-minute time frame and we zoom in, then what you see is more likely a 3-wave structure. Could this be a 5-wave? I mean, 1, 2, 3, 4, 5. Looks very awkward, doesn't it? Because usually a wave 4 is longer in time than a wave 2. Now this wave 2, of course, is much longer in time compared to a small wave 4. Now that is possible. It's less common. It is possible. There is no overlap between the high of a wave 1 and the low of wave 4. So again, it is possible, right? Nothing says that this cannot be an impulse, but it's just not a very clean impulse, if you know what I mean, right? Following the rules of Elliott waves. Now after that move, price then started ranging over here for then a potential A, B, and then a C to the downside. Very, very long horizontal price action throughout the weekend. Very difficult to count as well, to be honest, which is the main reason you don't see a count on the chart, because sometimes you can just look at the chart, especially if you have some Elliott Wave knowledge, you can just look at the chart and base your probabilities on what you see and not necessarily have to count all the individual structures to the T. So I do have, as you can see, the 1-to-1 to the 1.236 from the high over here to the low of A, potential A, to then the high of a B, or over here, and then the most common target has been hit nicely with this wick to the downside, and the blue line that you see is a small little point of control of this range over here, which acted as support, which was literally the last man standing for more downside. So this acted as support. If price is going to come down again, then yeah, in my opinion, we just go to 29k over here. And also we had the 382 over here pulled from the low of the wick to the high for some extra support. And from that moment, price then started to move to the upside. Price moving to the upside, well, if we're looking at potentially a three-wave structure, right? So this then being a 3, 3, and then you'd be looking for maybe another 3 towards the upside. If that is the case, you can pull a fib from the low to the high of the first three-wave structure, and then a W, to the low over here of the wick, in an X, and then you'd be looking for a three-wave structure in a Y to the downside, with a common target being the 0.618 at 30.9k, and the most common target being between the 1 and the 1.236, which is between 31.4k and 31.8k. What's quite interesting about the 1.236 is that we have a daily level over there at 31.8k, as you can see as well. So there is some resistance just above price, but of course, if price moves to the upside, the 32k highs are very, very close. So the daily over here, even though the daily is nice at 31.7k, just above over here, we have that liquidity grab at 32.5k, which might even be more interesting, but we have to wait and see how price is going to develop, potentially, of course, out of this range towards the upside. Now, some other things that are written over here is the retest of the weekly point of control. And I can always recommend people to keep an eye on the weekly point of control, because it's just always an interesting area of support. So now the weekly point of control moved towards the upside. But if you check my previous video, you know that the weekly point of control of the last week, so the past week, was over here. Price wicking below, moving up, backtesting the current, or not anymore of course, previous weekly point of control for then continuation to the upside. Price coming down once more just before the Monday started in my time zone over here. Again, wicking on top of the previous weekly point of control and then moving up once again. Now, of course, this week, the point of control has moved to the upside. Maybe it changed again because it's a Monday and, you know, I did my analysis before 7 a.m. in the morning. So, you know, things change, especially with the volume here. But always keep an eye, at least I can recommend, on the weekly point of control. If we then look at the CVD divergences, stuff has been very, very interesting on the lower time frames, especially with this move towards the downside. So, of course, people see bullish divergences going on, which I'll show you in a second. Higher low on price from this wick, higher low on price, lower low on the CVD. However, we also have the following going on. So if I open this screenshot, this is the 3-minute AGGR chart, showing you in a second, but here I actually drew things on the chart. What you see is while price is moving to the downside, each time it is accompanied by bearish CVD divergences. Each red line you see in the chart are bearish CVD divergences, while price has been moving to the downside. Of course, on a bit of a higher time frame, we have bullish CVD divergences, higher low on price, lower low on the CVD, which I can show you on the actual AGGR chart over here. So if I zoom out on the 15, just look how ridiculous the chart looks, right? Higher low on price, much lower lows over here on the 15-minute bullish CVD divergences. And if I zoom out on the 5, which I think is more reliable at the moment, we had a higher low on price over here, and on blue you can still see that still over here on blue price is below the wick low. So we still have a bullish CVD divergence, but even though that looks also bullish on those time frames, every time price is moving to the upside over here, we saw bearish CVD divergences. So I would love to see some support on a 3-minute or 5-minute for potential upside, because on this chart, as I've just shown you on the screenshot, this time frame on the 3-minute, you will find these bearish CVD divergences. Now, if we then look more locally at what's been happening at the moment, we have some bullish ones over here, higher low on price, lower low on the CVD. Okay, that's quite nice, right? And we have to wait and see if price can take the high over here, as that is the target of then a CVD divergence, hopefully then, of course, without generating also bearish CVD divergence, as this blue line is moving to the upside as it stands, almost being above the high over here, which would be the high of the price action. So interesting stuff happening on the low time frame. Now we do have some support just below price, as you can see over here, very locally between 30.6k and 30.5k, and naked point of control over here, which I will put in a chart for you so you can note it down here, 30.5k. So that is interesting support, and based on the reaction of price over here, if it comes down, I'd be interested to see, okay, what might happen. Potential long scenario over here, but then again, you know, I have my entry requirements. I know what I'm looking for with my personal developed trading strategy. You have to make sure you know what you are looking for in your trading strategy. By the way, something that's very interesting, and I just noticed, the bullish divergences on the AGGR chart that you're seeing over here are invalidated on my Coinbase chart. Here we have a higher low on price, lower low on the CVD, but on my chart, this low took the low already. So in my opinion, that means the CVD divergence that we have over here of a higher low and a lower low on the AGGR is invalidated, because on my chart, it actually took the low. So yeah, I do expect price to actually go towards this target box, but we wait and see. We also have news going on, of course, this week, 8 p.m. on Wednesday, 4 p.m. on Thursday, and 2:30 p.m. Central East European time on Friday. High impact news, so make sure you trade safe. And then the new thing that I do in all of my videos is the probabilities, because many people were interested in what are now the highest probability scenarios from an Elliott Wave point of view. So first of all, on the medium time frame, the highest probability scenario at the moment is the medium time frame bullish scenario, in my opinion, especially with the range that's going on over here. So waiting for price to maybe see a move to the downside or not, but this is the highest probability scenario for me on the medium time frame. On the lower time frame, the highest probability scenario at the moment is the bullish scenario, where again, this is then a 1-2, potentially going towards this area. I think that would be nice, depending how it comes down. Potential setup over here. On the micro, the more bearish scenario has a higher probability, because it is quite difficult to count a nice 5-wave structure in a move to the upside. I've shown you it is possible. It's just not clean from an Elliott Wave perspective. So therefore, currently the more bearish scenario might be preferred. Which one of the two? Difficult to say. I think the X looks quite nice, but yeah, difficult to say at the moment, as this liquidity grab, man, that would be so sick. Liquidity grab, breakout traders being trapped if price moves to the downside as well, so that would be very attractive. And more locally, very locally, I would like, or it would be nice to see price move to this target box over here, so a little bit down, and then wait and see what the reaction is going to be over here for potentially then more upside in an X or a B, if we get it, of course, because we don't know what price is going to do. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion. And for now, thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.